trading turtle soups, a trading plan using turtle soups. That is exactly what we are going to touch on today. So first off, we are going to touch on turtle soups in seek and destroy conditions. And then afterwards, we are going to look at certain techniques that we can use using turtle soups in trending conditions. Again, just a small disclaimer. If you want to use these trading plans that I'm teaching here, don't blindly go into trading a live environment or whatever. First, study the absolute shit out of these trading models. And if you haven't watched the full A to Z guide, I would first recommend doing that. Afterwards, slowly implement it on a demo account. And from there on, if it works for you, then slowly start scaling, etc. But again, that is up to your own decision, not financial advice or anything. But don't just blindly start trading these trading plans. You need to first study. That is very important. Once you have the ability to spot it in hindsight, then you slowly start forward testing. I would not advise backtesting unless you do hindsight backtesting. I would always advise first hindsight backtesting and then forward testing. Reason being for that, backtesting using the replay tool, in my opinion, always builds up unhealthy habits. Let's take a look at seek and destroy conditions first and how we can trade those. So first off, we need to determine the range that we are actually stuck in. Because if you remember the previous episode, seek and destroy conditions happen at 50% at equilibrium of a certain range. Once you have determined that exact range, what you want to do, you want to grab your Fibonacci right there. You want to draw it from the range that we are stuck in. So you can see we are stuck from that high to that low. And you can notice I have an equilibrium level 0.5, but I also have quadrants. Quadrants indicating that I have 0.75 and 0.25. You can classify the quadrants as the following. From 0 until 0.25, that is discount. From 0.25 to equilibrium, that is discount premium. From equilibrium until 0.75, that is premium discount. From 0.75 until 1, that is your premium. The place where you want to look for potential entries is when we are coming off of either a premium or a discount, and you want to be targeting equilibrium again. So for example, if we zoom in a little bit, this area right there, here we are coming into premium right there. Once we reach that premium, we want to target equilibrium. So in that small area right there, that is exactly where we want to get involved. A small area. Again, in seek and destroy conditions, you need to understand it's called seek and destroy for a reason. It's not trending conditions. That's exactly why we have different names for different conditions, right? So you can't expect price to run very far. In seek and destroy conditions, you are not using a very large target. Exactly what I'm going to show you in just a few moments. So let's dive into the chart, having that premium on our chart right there. So here we are on the 5-minute time frame. Now there's a step-by-step process that we need to follow using turtle soups here on a seek and destroy manner. So the first thing that we had established was a range. Then we use the quadrants. Then we wait for either a premium or a discount. In the meantime, going into the lower time frame, what needs to happen is on the lower time frame, so here on the 5-minute time frame, we need to see a Judas that sweeps liquidity, then has an ST model. So it's a step-by-step. Range, quadrants, Judas, liquidity sweep, ST model, entry, close, target. So we have our range, we have our quadrants, we have a Judas. Now, does the Judas sweep liquidity? If we look to the left, yes, it does. Right there, we have a nice liquidity pool. Again, how can we define liquidity? It's just swing highs. Swing highs right there getting taken out. Now we want our ST model. We have first displacement lower right there. We want a second one. That right there, that is exactly what you would want to see. Enter on an overlapping PD ray right there, covering the intermediate term high and targeting a close target. Now, what do I mean with a close target? You want to target a liquidity pool again close to equilibrium of the range that you are trading in. So what does that mean? Right here, we had established on a daily time frame the quadrants, right? This right there is your equilibrium. That line right there. So if we zoom in again, we can see we have liquidity right there beneath equilibrium. Now there's a few things that you can do here. You can either target equilibrium itself or a fair value gap that is close to equilibrium, or you can target that liquidity that is sitting right there. And what is liquidity? It's just a swing low right there that is close to that equilibrium. But it's important to understand that in secant and short conditions, you are not having a very large target. And what I mean by that is you're not hoping that this absolutely drops to the bottom of the market. That's not logical at all. We are not in a trending environment. Price will likely come back to your entry right there. So a close, easy target, a get in, get out. So this right there was a first entry that we could have taken. This is my preferred entry. There is another one. You can also enter on that first fair value gap, just like we talked about in the ST model video itself. This is also an entry, but again, just because you get in early doesn't always mean it's the better entry. Not at all. So the higher probability entry is that second one. This can also be your entry, but again, study the ST model that we talked about and use the time frames correctly. Then we have a third entry. If you miss this first one and you miss that second one, or if you want to wait for even more confirmation, then right there is your third entry. But it's important to understand that there are a lot of different entry types right there. It's important to understand you need to stick to one of them. So either the first one, either the second one, either the third one, but stick to one of them, because in the moment when that entry actually comes to you and you don't have a clear and concise entry pattern and you don't have the guidelines for your entry pattern, then those emotions will start to rise and you will enter based on emotions, not on having guidelines that is backed up by data. That is very important to understand. You need to have one entry pattern that you can stick to every single day. So if you enter right here, and let's say you put your stop loss right there, then again, what is close to equilibrium? You can either target equilibrium itself or the liquidity right there. And that would be your target. Again, easy target, get in, get out. It's not a trending condition, so keep that in mind. Now, what do we do after? Again, we start all over again. The trading model repeats itself. Again, we determine the range. Well, the range hasn't changed just yet. We go over the quadrants again. We can see we don't come back to new quadrants. We don't reach discount, discount. We don't reach premium, premium anymore. So right here, you don't get involved unless there's a new range to work with. So let's take a look at that. Because if we go back into the 5-minute time frame, what can we see? We just traded this range right there. And then we come back up and then we go back down again. And then we fail to follow through on the lows. And right here, we come back up again, indicating that we have a new type of range because we are not following through anymore. So we draw our quadrants on the new range right there. And we go over the same exact process. We have a range established, quadrants established, Judas liquidity sweep, entry, close target. So let's look at the quadrants. Again, at this moment in time, right here and right here, you're not sure if this is a new range because you're not sure if it's following through. But once this fails to follow through and fails out to take these lows, then you can confidently say that this is failing to follow through. It failed to follow through on the highs. It failed to follow through on the lows. So if we again look at the quadrants right here and we draw the premium right there, and we also draw discount right there. Now, again, let's follow the exact step, a Judas. Where's the Judas? This is your London session. All right, nice. Here we have London coming into it. No displacement lower yet, so there's nothing to work with just yet. Here we have an early ST right there, a very early ST. Would you cover this high right there? No, you would not suffocate your stop loss. That is very important. Don't suffocate your stop loss. Give it some room to breathe. Right there, your potential stop loss. What is your target? An easy target close to equilibrium. Where was equilibrium again? Let's mark it out right there. That right there is your equilibrium. All right. Then we have a swing low right there, a swing low right there. We have some equal lows sitting right there. So that is already a nice target. That is a 1 to 2 in secant and historic conditions. Perfectly fine. You don't need more in secant and historic conditions. We have a couple of entries afterwards as well. We have that order block right there. Targeting what? Again, the same right there. Now it is logical to cover that intermediate term high. Targeting the exact same 1 to 2 again, perfectly fine. Afterwards, we reach that target and we head into what? Discount right there. Once we are in discount, we can again, same process, Judas, liquidity sweep, entry, close target. Right here, we have our Judas and we have our liquidity sweep right there. For the shorts, the liquidity sweep was right there above that swing high. And on the lows, your liquidity sweep is right there. So we are in discount right there. Now let's look at an entry. So a Judas, again, right here, your PM session starts. Then we have one ST right there, bullish fair value gap. Here, bullish fair value gap as well. That is an entry right there. Targeting what? Close to equilibrium, any swing high, that could already be your target. And afterwards, this could have also been your entry, covering the same low, targeting equilibrium, swing high, close to equilibrium. Perfect. Now that is a loss. So that is 2 potential loss that we could have taken. And if we follow price action afterwards, what happens again? Again, later on in the PM session, we have again a liquidity sweep right there. Then we have ST. Already here, a small bullish fair value gap that could already be your entry, covering your stop loss. Again, don't suffocate it. Give it some room to breathe. Targeting what? A swing high close to equilibrium. This swing high is already a 1 to 2. A 1 to 2 in secant historic conditions, be very content with that because that is more than enough in secant historic conditions. Afterwards, we also have this entry right there based on that order block with the fair value gap overlapping, covering that low right there. This is also almost a 1 to 2, a 1.75. In secant historic conditions and that late in the day where you have that last hour, that power hour, a 1.75, be content with that. That is nothing to be ashamed of. That is actually a great result if you can achieve that consistently in secant historic conditions. So remember what we went over. Range, quadrants, Judas, liquidity sweep, entry, close, target. Once we reach equilibrium, everything is invalidated and you don't look for a new entry until we reach a new quadrant, either premium or discount. All right, now let's take a look at how we can use turtle soups in trending conditions. Here we are on EU on a 4-hour time frame. Now we came into a daily fair value gap right there. Then we had a lower price and eventually we had a bearish fair value gap to work with right there on a 4-hour and this order block to work with. Once we had that order block, if we now go into the 1-hour time frame and we look at a rejection right there off of that order block, expecting lower prices, what we can do here is enter on a 1-hour fair value gap. Now, I can already hear you think, how is that a turtle soup? Because if we use this 1-hour fair value gap right there, and if we then go into the lower time frame and use time to our advantage, because time is important. Why is time important? Again, it's a very vague concept. A lot of people say time is important. Time is important because time will exactly tell you in which PD rate price wants to sting into before we head lower. So what do I mean by that? If we now go into the lower time frame, into the 5 minutes, right here, we start London. And London stings into that 1-hour fair value gap and continues lower. So the reason time is important right there, because time will tell you into which PD rate it wants to sting into, and from there it will continue lower. When London kill zone opened right there, we first had a move down, and afterwards we had a 1-hour fair value gap hovering right there. So if London now has a retracement higher, we go and look and see what it wants to potentially sting into, to which premium array it wants to sting into before heading lower, with the already established context that we had, which leads us to a turtle soup entry right there. Now, why is that a turtle soup entry and why wouldn't you expect that high to hold? Because we have a 1-hour fair value gap right there. Remember the saying, every time frame needs to be in context of the time frame above it. 5 minute needs to be in context of the 50 minute. 15 minute needs to be in context of the 1 hour. Obviously, then the 5 minute needs to already be in context of the 1 hour. If there's a 1-hour fair value gap right there, you can't expect that high to hold. It can happen, but the probabilities of it happening are very slim. So a 5-minute swing high inside a 1 hour fair value gap or close to it, that is your entry. And this is fractal, right? You can also use a 15-minute fair value gap with a 1-minute swing high inside of it. Where do you place your stop loss? On a 5-minute base, you place your stop loss above the intermediate term high. What is the intermediate term high right here? The clear, concise intermediate term high right here is that high right there. What do you target? Well, your target was already established on a 4-hour basis. Remember what we talked about in the earlier A to Z guide videos. From premium to a discount array. Your premium array that you're essentially trading off of is that 4-hour order block. The discount array that you're targeting then is a swing low on a 4-hour basis, which is an intermediate term low on a 5-minute base. So that is your target with a beautiful entry right there. Now, it's important to understand the context behind what I'm doing here, because you can notice that the 1 hour fair value gap right there, the 1 hour fair value gap that's sitting right there, that trade is taken before we take that draw on liquidity. So inside that range from premium to discount array, inside that range is when I take the trade. That is very important to understand. Now, this was one of the techniques, but you also have a technique selling on weakness and buying on strength. Here we are back on ES again. And what we can see right here already is we have a turtle soup right there that we could have potentially entered on. Now, of course, in hindsight, beautiful, but what are the steps to achieving that? The first thing is context. What is the context here? You have, again, it's your Judas, it's your liquidity sweep, it's your entry. It's the same as those seek and destroy conditions, but you don't use a range, you don't use quadrants. Right there, the context is as well. We have no fair value gaps higher in this leg up. Whenever there's no fair value gaps higher in that leg up, the odds of it getting swept are already increased. Now, it could have also gotten swept if there were fair value gaps in that leg, and time will tell you that. Again, what we went over, time is important in that because time will tell you, does it want to sweep that? Does it not want to sweep that? Does it want to respect the low? And the reason I say that is because your entry opportunity doesn't present if time doesn't tell you anything. And let me show you why right there. So we go from time. So at 8:30, if we go into the 5-minute time frame, here we are on a 5-minute time frame. Now, this is the buying on strength technique. One thing you can obviously do is just place a buy limit below that low. But what you need to understand, if you're seeing someone on Instagram, on Twitter, on YouTube doing this, then just know their stop loss isn't like that. They don't have a tight stop loss. Their stop loss has room to breathe. So yes, you can enter on this, but you need to give your stop loss room to breathe. So on Forex, it's like a 20, 30 pip stop loss. On ES right here, I would argue, all right, maybe an 8 to 10 pip stop loss. So you don't suffocate that stop loss. That is very important to understand. And that is why I say, and that is why I mention a lot of times, turtle soups are nice to trade and they look very fancy and you can get to a bottom right there and they feel very great. Your ego gets satisfied, etc. But in my opinion, they are not the highest probability. They are not the best entries. They don't give you the best RR. In my opinion, if you just wait, there are better entries out there. So right there, this is one of the techniques that you could use just purely based off the Judas and liquidity sweep. That time will tell you into which discount array it wants to trade to. Again, right here, if we use time, we can use the buying on strength technique. Buying on strength technique. You want to enter above the candle that was responsible for sweeping that low. So what I mean by that, you have this low that we were talking about. Then you have this down candle that was responsible because this is the one that came below that low, that was sweeping the low. Buying on strength, you place a buy stop above that candle's high right there. You would have gotten tagged in right there. You place your stop loss below that low, that potential intermediate term low right there. And afterwards, you target the exact premium array that we had in mind already going into the 1 hour discount to premium array. And the reason I say time is important and time will tell you exactly what it wants to do is because Let me clarify it one more time. No pun intended. Right here, 830 had this Judas swing lower. There was no entry opportunity beforehand. If you use time and a Judas and that liquidity sweep, there was no entry even before that. That is why time is important. And time just stinks into that discount array, into that liquidity sweep right there. And then you place your buy stop right there, buying on strength, and then you're in and you target those exact highs. Now, of course, you guessed it, on EU that we just showed. You can also use the exact same methods that we went over here, where you first enter on the anticipated liquidity sweep and then you use the buying on strength technique. But on EU, of course, it was a short, so you would use the selling on weakness technique, which is the exact same, only of course inversed. It's important to understand when seek and destroy conditions happen, both for traders that are trying to trade seek and destroy conditions and traders that are trying to avoid seek and destroy conditions. So if you haven't watched that video just yet, then right here on the screen you can go to that video and I will tell you exactly how to spot seek and destroy conditions. All right, perfect. Thank you.